Welcome everyone. I want to make this video on a product that we have here on Beyond the Huddle, and it will be the derivatives long and short extremes. These are our Discord alerts, and essentially I want to walk you through this quick overview so you know what it is, sort of how to use it, and what you should be expecting when buying this this product. Now remember that this is not a standalone product. It comes with the liquidity pool, market structures, and indicators, which I'll be making a separate video on as well, but we'll keep this one just to the Discord alerts. So why should you use the long and short extreme alerts? It's really great at identifying when one side of the market is overcrowded. That's actually like the main thing that it's for. So you want to avoid potential trap traders, right? So you don't want to be the trap trader. You want to take advantage of trap traders, and this will increase your chance of success in the market, okay? Obviously, it's an automated alert, so it comes to Discord, so you don't have to be in front of your computer just staring at your screen. You can just check it. The Discord alerts that we have here, so let's go to that. The Discord alerts that we have right here are for the daily and the 4-hour. We're doing some testing with the hourly to see if we do want to offer that for some people that like to do some, scalping or something like that. But it is not something we've made a decision on yet. I do like the 4 hours. There's right here is separated by short and longs, and then we have the dailies, long and short as well. Now the way this works right here, as you can see, if we go to the long ones, is again, this is on a 4 hour. So it means every time I click on it, each chart will be a composite of the 4-hour time frame, as it says. So when I click on it here, exactly like how do we use this, right? Well, when there's too many people long, we want to look for clues as to why the market is overcrowded, right? Why this is an overcrowded trade and why it has a potential to make a high. Super important. People think of the word long, they think you're supposed to be buying. No, in this specific case, what we're saying is, hey, the market is too overheated, everyone's too long, why should it be a high, right? Is there some sort of resistance near? Is there some sort of price action signal or something like that you guys may be able to use? And that's why I'm saying that this could be a standalone tool, but it needs to be filtered out with some sort of support and resistance, and that's what we offer, the market structure and the liquidity pools, which again I'll be explaining in a different video. So as it says here, you can use any technical analysis, order flow, or any other tools available to confirm these highs. So again, remember, these longs will be exiting the trade, and that is what's going to fuel the move lower. So if you guys are familiar with order flow, this is what's called a delta unwind, or as Misha likes to call it, a pinch point in the market. So that's the 4 hours. Again, same thing for the dailies. And when you go to the shorts, it's the same thing, but the opposite, right? When too many people are short, we want to take advantage of that because it's an overcrowded short trade and it has the potential to make a low. Now, why is it important? Like I mentioned before, the delta unwind will mean that those people will be trapped and they'll have to buy back the market. When they buy back the market, that's what causes the aggressive moves higher. So really cool stuff when you definitely understand it and you get the theory behind it. So that's what the product is. As you can see here, if we go back to the longs, and I'm going to choose the longs because the market has been moving higher. So again, you can see this one right here, right? Now the alert comes in at the open of that candle, of the arrow, right? So when you see the red arrow here, the market went up aggressively. You can see that the longs were extreme. So then at the open of the next candle, so there was a really nice move lower if you guys are, intraday traders, or again, you could even scalp these 4-hour ones. I don't use it for scalping, but you could. As you can see here, it did give you enough move for at least one bar down. The ones that I'm interested in are these impulse legs. So up, down, and then up again, right? So these nice multiple 4-hour candles is what I'm interested in. So as you can see here, we had right here some alerts come through. And then again, this is basically telling us there's too many longs and there's high volume, okay? So this is probably like the best type of signal that I like to see. Too many people are piled into one trade, and also the volume is high right here, which generally can give you a high or a low. You can see right here that the volume was high, that ends up being the low. The volume is high, that ends up being a high. Again, the volume is high, that ends up being the general area of the high. The volume is high, that ends up being the low here, but then we swipe it one more time, and then finally here. So remember, they like to distribute positions, the smart money, the large players, the whales, when there's a lot of volume, and they also have to cause a lot of volume when they're getting into their trades. Although you could argue that smart money likes to accumulate when it's silent, right? When it's quiet, when the market is calm, which I do agree with. But at the same time, if the market is having a very violent move, which is what you might see when the shorts are moving aggressively, right? When they hit an extreme, then you are potentially likely to see an extreme in the volume. So anyway, you can see right here how we did have some extremes. Let's go see. This came in this morning at 8:01. Let's go see how that turned out. As you can see here, quite the nice trade. So again, it's at the open of the candle that you're going to get the alert, and it fell 3%. If you're doing, proper risk to reward, you would have then taken your position here. You would have put your stop above the high. Maybe you added a little bit. Again, I trade through a spot market, so there's a spread. There's probably no spread where you guys are trading. And look at that. That's a 3.25 LAR, right? If you're risking, 2%, you times that by 3, right? If you're risking 5%, you times that by 3, or 3.25 to be exact, right? Let's just round it down to 3. If you're risking 1%, that's a 3% move, so on and so forth. So this is really nice. This exactly exemplifies what we're trying to do. Now remember, what did I say here, right? You're not taking every single alert that comes in, because some of the time you see these right here, how it's giving you, hey, there's a overcrowded long, overcrowded long, overcrowded long, but then the market keeps going higher and higher. Well, if you study the price action and the support and resistance tools like the liquidity pools and the market structure and even the MSI that I'm going to show you guys in other videos, then you're going to understand why none of these were actually alerts, and why this one was, maybe we'll take a look at that in a minute actually, and then this one definitely was. So again, actually I'll just save it for the market structure and liquidity pool video, which should be somewhere in our YouTube next to this video here, because I'm making it at the same exact time. But again, there's definitely reasons why you should have been buying here. You definitely should have been buying here, why you could have been buying here, and why you definitely should have been shorting here. And if you look at all of these, so let's just look at another one, SNX. Again, it had high volume somewhere around here on the way up. We hit a long extreme right here, so let's go take a look at SNX and how it performed. SNX USD, and wouldn't you know it, right here, it's beautiful when this works out that way. And again, we're not looking for a 100% strike rate thing here, but look at that. If you can get 2R, at 2% risk, that's a 4% gain, and so on and so forth. That's not bad if you do that consistently. And eventually you're going to hit these crazy big ones that will then multiply and compound your trades. So with that being said, guys, I think I'm just gonna wrap it up here. That's about all I wanted to mention. I think we covered the long extremes, the short extremes, the different type of time frames, right? The daily and the 4 hour, and we covered the volume, right? How it usually causes the highs and the lows. Now I will say this, the alert, when it comes in, it's only taking into account, is it a short extreme, and it'll tell you, and is it a long extreme, and it'll tell you. We didn't add the volume because we wanted you guys to be able to do that one more discretionarily, right? So you can see, again, if you think that it should peak the market, then you can use it. For example, right here it was an extreme in volume, boom, it makes a low. Right here is an extreme in volume, it makes a temporary high. And again, this is the one I like, where it's the high volume and high amount of extreme shorts or longs, right? I really like that one. As you can see here, it was extreme in volume, and then eventually right here you got the extreme and longs as well. So with that being said, guys, I look forward to seeing you on the next video, where you're going to get to find out how to filter these better, because you'll have a deeper understanding on market structure and liquidity and targets and entries in the market. So I'll see you guys in that video. Peace.